We're jumping straight into AST SpaceMobile today. Everyone is watching the price action. But the real story is the transition from a science project to a commercial reality, specifically the Bluebird 6 milestone.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get the ball rolling, do us a favor, subscribe and hit the like button. It helps us keep the lights on and keeps you ahead of the curve.
Okay, so let's unpack this.
Yeah, let's do it. We are looking at a stock that has been absolutely tearing it up.
It really has.
Yeah.
I mean, this company is pre-revenue, technically,
Yeah.
but it's being valued like a giant.
So we should probably simplify what they actually do before we get into the, the bull and bear cases.
We have to. Because when you see a market cap hovering between, what, 35 and $45 billion, and a share price nearing $95.
And that's up nearly 40% just in the first month of 2026.
Right. You have to ask,
Right.
What are we actually buying here?
Exactly. It's a total breakout story. We saw these massive gains in 2025, and now 2026 is starting off like a rocket launch, literally. But the charts, as exciting as they are, they're just the symptom.
Right, the cause is this huge shift in the narrative.
We aren't just hoping the tech works anymore. We're seeing validation. And that, I think, brings us right to the core of the bull case, the killer app.
And that killer app is direct-to-handset satellite broadband.
Okay, so let's strip away the jargon. What does that actually mean for you or me or anyone listening?
It means connectivity from space directly to the phone that is currently in your pocket.
That is the aha moment right there. I mean, think about how wild that is. Usually when we talk about satellite internet, we're picturing a big dish on a roof
Or a chunky terminal you have to lug around in a backpack.
Yeah. We're used to those old Iridium phones that look like bricks with antennas the size of a ruler. You know, the ones you see them in disaster movies?
That's the historical context, right? You're thinking of specialized hardware because traditionally phones needed a lot of power to shout back at a satellite.
The physics were always the problem.
Always. Your phone has a tiny battery and a tiny antenna. It whispers. Satellites are usually shouting. But AST SpaceMobile is changing the physics equation. You don't need a special satellite phone. You don't need a terminal.
You just need your regular smartphone, the one you use to check emails.
That's it. The satellite acts like a cell tower, just much, much higher up.
It's the ultimate convenience play. But let's dig into how they do that, because this is where the moat, the competitive advantage, really sits. It's not magic.
No, it's size. These Bluebird satellites are massive.
And you have to really visualize this to understand why it's a moat.
Yeah, think of them like folding origami structures. They launch folded up really tightly inside a rocket fairing, but once they get to orbit, they unfurl into these massive phased array antennas.
We're talking about surface areas that dwarf anything else commercial in low Earth orbit.
By a lot. And the reason they have to be so big is sensitivity, because your iPhone isn't designed to talk to space. The ear in space, the satellite needs to be incredibly large to hear that little whisper from your phone from hundreds of miles away.
That's a great visual, a giant ear in the sky. And I love the origami comparison because it highlights the complexity if that thing doesn't unfold perfectly.
You don't have a satellite. You have a very expensive space junk.
Exactly. But if it works, you have a cell tower in space. And this tech is what creates that competitive moat we mentioned. So let's talk about the elephant in the room, Starlink.
You have to. Everyone knows Starlink. They're the massive player in this space.
But Starlink typically requires those user terminals, the dishy that we just mentioned.
Right. And that creates friction. And friction is the enemy of adoption. If I want Starlink, I have to buy the kit, which is hundreds of dollars.
Set it up, mount it on my roof, make sure there are no trees.
And pay a whole separate subscription. With AST SpaceMobile, because it works with your existing phone, the barrier to entry is basically zero for the consumer.
You don't sign up for AST, you just have AT&T or Verizon.
And that creates these incredibly high switching costs for the mobile network operators. If AT&T offers you coverage everywhere, literally everywhere, middle of the ocean, top of a mountain, are you going to switch to a carrier that drops calls when you leave the city?
Probably not. No way. That protects their market share in a way that's hard to replicate. It turns coverage into a commodity that only the partners possess. It solves that dead zone anxiety we all have. And speaking of protection, let's look at their bank account. This is where it gets really interesting for a so-called development stage company.
They are sitting on a cash buffer of $1.2 billion.
$1.2 billion. That is a massive number.
It's crucial context. Usually when we look at companies in this phase building satellites, testing tech, They're starving for cash. They're constantly raising money, diluting shareholders.
Just trying to keep the lights on. It's what we call the valley of death for deep tech.
It is. It's that dangerous period between having a working prototype and actually getting paid for it. AST SpaceMobile has a war chest that bridges that gap.
It's the runway they need. Launching satellites isn't cheap, but having that $1.2 billion means they can deploy their constellation without that immediate panic of, we're running out of money next month.
It gives them breathing room to execute. But money in the bank is only one side of the ledger. You need money coming in.
And that's being validated by demand now. We aren't just talking about interest from carriers anymore.
No, we are talking about multi-million-dollar agreements. These are signed deals.
That is a huge distinction. It's moved from, hey, that's a cool idea, let us know when it works, to
here's a check, let's get this rolling. These agreements signal that demand is accelerating.
And the genius of their business model is the partnership angle. They aren't trying to sell subscriptions to you and me directly. This is a nuance I think a lot of retail investors miss.
They do. They think they're going to get an AST bill in the mail. No. That's the most important part of the business model. It's B2B2C, business to consumer.
So they integrate with the existing carrier networks.
And they get access to premium customers, millions of them, without having to build a customer service department, without having to run ad campaigns.
The carriers, the AT&Ts, the Vodafones, they do all the selling. AST just provides the pipe.
Think about the savings on customer acquisition costs, or CAC. For a normal telecom, acquiring a customer is expensive. You have to market, support, deal with churn.
AST's CAC is effectively zero. AT&T already owns the customer relationship. They just flip a switch and say, hey, want global coverage for an extra $10 a month.
Exactly. They are a wholesale provider of spectrum utility. It's a high-margin model if, and it's a big if, they can get the birds in the sky.
It scales beautifully because the infrastructure is shared globally. A satellite passing over the U.S. serves AT&T customers. An hour later, it's over Europe serving Vodafone customers.
It's B2B2C at its finest.
And if we look at the technicals for a second, and, we don't give advice here, but the momentum is undeniable. You're seeing buy signals flashing, positive moving averages.
Narrative is driving institutional interest. And retail is piling in because the story is so easy to understand. No more dead zones.
It touches a nerve.
It does. It sounds perfect, doesn't it?
Right.
Like the future of telecom is already here and the stock can only go up.
Yeah.
But let's hit the brakes for a second.
Okay.
We have to be disciplined here.
That sounds
amazing, like the future of telecom. But let's look at the flip side. Why are some people betting against this?
Yeah, why is there still a significant amount of skepticism?
Because, frankly, it's priced for perfection.
We have to be honest about that. When you have a market cap in the 35 to 45 billion range, and you are technically pre-revenue,
meaning you aren't generating significant operational cash flow yet.
The market is pricing in a flawless execution.
And flawless is a very high bar in the space industry. I mean, we need to look at the latest market context. Despite all the hype and the price action, the Q3 results actually showed revenue falling short of expectations.
And at the same time, operating expenses rose.
Exactly. That creates a sort of cognitive dissonance. The stock is flying, but the P&L is bleeding.
That's the classic growth stock problem. You have this massive valuation based on future promises, but the current reality is a cash burn.
Which brings us to the execution risks. As the saying goes, space is hard.
And I don't mean that as a bumper sticker. I mean the logistics are a nightmare.
It really is. It's one thing to have a plan for 45 to 60 satellites. It's an entirely different thing to actually get them built, get them on a rocket, get them into orbit, and have them work perfectly.
Every single launch is a risk.
You're dealing with complex supply chains. If one supplier for a specific chip or a solar panel hinge is late, the whole launch schedule slides to the right.
And these are custom components. You can't just run down to the hardware store.
No. And delays are the killer. If a launch slips due to weather, technical glitches, rocket availability, the revenue timeline slips. But the costs,
the salaries, the rent, the research, that cash burn continues regardless.
And this is where the valuation gets scary. If the market expects revenue in Q2 and it doesn't show up until Q4 because of a launch delay, the stock gets punished.
Severely. And while we praised that $1.2 billion cash buffer earlier, we have to remember that free cash flow is negative. They are spending heavily on CapEx.
Capital expenditures. They're building infrastructure in space. That is some of the most expensive infrastructure you can build.
It costs millions just to ensure these launches, let alone build the hardware. So if they stumble, if there are major delays, that cash pile shrinks fast.
And then you're looking at needing more money.
Which usually means selling more stock. Dilution, that's the dirty word here. It slices the pie into smaller pieces.
And we can't ignore the competition. We mentioned Starlink's terminal requirement as a disadvantage earlier, but let's not pretend Starlink isn't a juggernaut.
Oh, not at all. They have incredibly deep pockets. They have a massive head start on infrastructure in orbit.
And they are experimenting with direct-to-cell technology, too, partnering with T-Mobile.
That's a great point. The market fears that Starlink could pivot. What if they figure out a way to compete more directly? What if they lower the friction? They launch their own rockets. That's the key difference.
That is the key. AST has to pay for a ride. Starlink owns a taxi.
That is a massive competitive pressure to have breathing down your neck.
It gives Starlink an inherent cost advantage and schedule control. If SpaceX wants to prioritize their own satellites over a customer's, they can.
So AST is relying on third parties to get to space. That adds a layer of dependency.
It does. So we have this tension. On one side, a revolutionary technology with a massive moat and carrier deals. On the other side, a sky-high valuation that demands perfect execution in an industry known for delays and, well, explosions.
So what does this all mean for the next few months? What should we actually be watching?
We need to filter out the noise. There are a million tweets a day about this stock. But really, there are only, I think, 3 things that matter.
Okay, lay them out. If you are trading this, what's number 1?
The launch cadence. That is the metric that matters more than anything else for the next 30 days to 12 months.
Break that down. What are we looking for?
Speed and reliability. They're aiming for 45 to 60 satellite launches by the end of 2026. That is an aggressive schedule.
We are talking about nearly a launch a month, or large batch launches.
Every single launch is a catalyst. Every successful deployment validates the model and pushes the stock. Every delay will be punished. We need to see them hitting those windows.
Okay, so the calendar is the map. What's the second thing?
Within that map, we need to watch for specific commercialization milestones. We've mentioned the Bluebird satellites earlier. Updates on their performance are critical.
Are the unfolding mechanisms working 100% of the time? Are the thermal dynamics holding up?
Right. But there's another acronym we need to watch. SHIELD.
Yes, SHIELD. This is the government and defense side of things. If you see news about SHIELD defense validation, pay attention.
Why is that so important?
That is a specific milestone that signals reliability to the biggest customer in the world, the U.S. government.
And government contracts are sticky. And more importantly, they are often non-dilutive funding. They provide steady revenue that doesn't depend on consumer adoption rates.
So it opens up a whole new potential revenue stream outside of just cell phones.
Exactly. Imagine tactical communications for soldiers that just use a secure smartphone instead of a heavy radio backpack. That's the SHIELD vision. If the Pentagon gives a thumbs up, that is a massive de-risking event.
It validates the tech on a level that consumer reviews just can't. If it's good enough for national security, it's good enough for a text message.
Okay, and the third thing to watch?
The earnings call. We have Q1 2026 earnings coming up, likely just after February. Now, usually we obsess over profit, but here,
Ignore the profit number. Seriously. They aren't going to be profitable yet. If you look for net income, you're going to be disappointed.
So what are we listening for?
You need to listen for the update on carrier revenue ramping up. We want to hear that those signed agreements are actually converting into cash flow. Are the carriers turning on the tap? That is the signal.
It's all about that conversion, moving from signed deal to recurring revenue. That is the bridge they have to cross to justify this $40 billion valuation.
We need to hear management say AT&T has commenced commercial billing.
We need to see the first dollar of real recurring revenue hit the books. That changes the psychology of the investor from believing to knowing.
Absolutely. Until that cash register rings, it's all speculation. Once it rings, it's a business.
So where does that leave us?
It leaves us in a fascinating battle. On one hand, you have the total addressable market, which is basically every human being on the planet with a smartphone.
I mean, that is the bull case. It is arguably the largest TAM of any tech company right now.
It's hard to find a larger market than everyone with a phone.
True. It's a market cap that reflects the ambition of connecting the unconnected.
But on the other hand, you have the harsh reality of orbital mechanics, massive capital costs, and the risk of execution failure. One bad launch, one solar flare, one manufacturing defect, and the timeline resets.
It's a classic high-risk, high-reward scenario. And it seems like the street knows it. The general sentiment right now is a standoff. The consensus is effectively a hole reflecting that tension.
They see the $60 to $80 price targets, but they also see the risks of a pullback, if there is even a single stumble. It's a tension between the dream and the details.
Precisely. The dream is worth hundreds of dollars a share. The details could drag it down significantly if they aren't managed perfectly.
It's a stock for the brave, but also for the patient, and frankly, for the informed. You can't just buy this and forget it. You have to watch the launches.
So here is the thought I want to leave you with today. If AST SpaceMobile pulls this off, if they get those 60 satellites up and working, they become the cell tower for the entire planet. They become infrastructure as essential as the power grid.
They change how the world communicates.
But if they stumble, the valuation has a long, long way to fall. The next 3 months of launches will likely decide the winner.
It's going to be a nail-biter.
Absolutely. That's the lowdown for today. We will be watching those launches closely.
Thanks for tuning in, and don't forget to subscribe so you don't miss the next update.
Catch you next time.